Go, Target, go. So even on a rough day for the stock market, good earnings come out and Target is surging. Stick around though. I read through the report and there was one thing in there that I didn't love so much. So I'm going to tell you about it and tell you what I think about the stock. Hello, my YouTube friends. Today is Tuesday, March 5th. My name is Adam Kahn and I'm the Rational Investor. Greetings from sunny Las Vegas. Finally, some beautiful weather after those crazy winds this weekend. Um, Today, we're going to talk about Target a little bit, who had some killer earnings and had some great things to say. Before we do, though, if you guys could do me a favor, if you haven't already, hit the subscribe button, smash the like button, make some comments, maybe even share the video with a friend or two. I really appreciate the support. It's been really cool watching the channel grow. And as you guys know, that's what makes YouTube's algorithm work, helps people find the channel. So if you're enjoying the content, I really appreciate you doing that for me. So I don't know if you guys saw a few videos I did not too long ago, but I know I mentioned it in a lot of videos. Back in like November and December during the Christmas season, when Target was busy as could be and people were talking about their stores being robbed and that they had to shut down stores and how their political beliefs were causing all sorts of trouble. And I would sit there talking about bad news, great companies. Target's a good company, and being able to close down stores that weren't profitable, especially in areas that they were having problems with theft and things like that, tightening up their employment issues and everything else is good for the company. Well, the last quarter's earnings were really good, and now they reported again today, and the stock is surging. As an investor, Target is a company I like and that I want to own. As a trader, I don't know that I would be buying it here. Now, you guys have to make your own investment decisions. This is not financial advice. I really mean that. The stock surged a good bit. You guys need to talk to a financial advisor and make your own decisions in terms of your investments. I'm just talking about things that have worked for me. And to be fair, I was fortunate enough when the bad news was coming out that I was picking up a little bit of Target. I was able to actually sell a tiny bit of the position today. As you guys know, if you watch that other video, I actually have some calls that I sold for January, the 210 strike. Obviously, at this point, those calls are going against me, but like I said originally when I sold them, if the stock gets above $210 by January of next year, I'm perfectly fine letting the stock go, even if it's trading at 250. I'll still have a little bit left in the account that I put in the safe deposit box and I never look at. These were a few extra shares that I was able to buy as a trade because I thought it was so undervalued, and I feel like it's just one of those companies that isn't really going anywhere. The one thing that I didn't like in the report that I read was that basically their increased earnings were based on higher margins, which they kind of admitted that they're slowing down in terms of the volume of sales. They were just able to make more revenue. That bothers me in terms of the overall economy and what's going on. Because if they're selling less items but just making more on them, I think eventually those margins probably have to come in as well. And maybe the sales will decrease a bit over time. That's why I let a little bit of the stock go here. Now, I don't know that I should have done that. Maybe it was a mistake. But to be fair, I was buying it around 107, 108, $110 a share. It's up to $168 last I looked. It's a really good trade in 3 months. So I'm okay either way. If it keeps going higher, like I said, we have a little bit more that we sold some calls on and things like that. And that portion of the report really bugged me. Now, the really cool thing is they're going to start competing with Amazon. They're going to start, if you sign up, I think their Red Circle or whatever their membership is called, and they're going to start offering 2-hour delivery windows for getting things delivered same day to your house, just like Amazon does. I think that's really good. They also announced a 10-year plan for growth in terms of how many stores they plan to open up and gave some guidance on what they see moving forward. What's nice and what this shows is even on big down days, when companies have good things to report, they can do the opposite and they can go higher. It's nice to see something go up. I mean, last I looked, the Dow was down 450 points. I thought I saw that Bitcoin was down $6,000 at one point. It's had a huge run up, and I think it's to be expected that we would see some sort of a pullback. And I kind of feel like maybe some things are stretched. But the thing is, what I keep saying in the videos is that wouldn't make me alter any plans of what I would do for any investments. My goal is to continue to save the best I can and continue to put away. It's more important the time that you're in the market than trying to time the markets. It's been proven over and over and over again that trying to time the markets is really tough and doesn't usually work. When I was a kid, there was some thing that they did where they had monkeys throw darts at newspapers, and whatever thing the dart hit, they would put that in a portfolio for picking a stock. The monkeys did pretty well in comparison to the overall market, and they actually outperformed some professional people who had picked the stocks they liked. I'm not saying you should randomly throw darts at a newspaper. I do think you can outperform the market, which is why I talk about this stuff. And if you buy great companies, you'll tend to do well over time. And as you see, it does work out, but I try to time it to when bad news comes out on these great companies, and hopefully they overcome the bad news. I talked about 3M in another video, and they're still struggling, but hopefully give it enough time and they'll perform as well. I talked about Disney, and look, they seem to be beginning to find their way. And I've talked about Starbucks that's been struggling for a while. These are all wonderful companies that I think in the long run, if you give them 10 years, they're probably doing just fine. Maybe not, which is why I say you need to do your own research and decide what works for you. But if I can buy these things when they're discounted in my mind, then I'm happy to buy them whether they go lower or higher. That was kind of what I was saying about Archer Daniels Midland. Maybe the news gets worse and the stock goes lower, but as far as I'm concerned, it's still discounted. I'm not sure if that makes sense or if people understand what I mean, but discounted is discounted. More bad news would prove that it's a bad price based on the more bad news, but that doesn't mean it's not fairly priced based on today's information. Um, anyway, feel free to put out some stocks that you think are discounted. Let me know your thoughts. I'm sure there are tons of them out there that are probably a good opportunity. I mean, I like that Palo Alto Networks had a rough earnings report, and I think they're down pretty good today again as well, bouncing around towards the bottom where when that news report came out, and maybe they go lower from there, which is why I say don't listen to me. I'm comfortable with the choices I make. I don't want you guys following it and having a loss and getting upset or feeling like I followed your advice and you picked one that wasn't good. You know as well as I do that sometimes you win, sometimes you lose, but I wish everybody the best. Again, thumbs up, like, subscribe, make some comments, make some noise, and have a great rest of your day.